Hello, and welcome to Managerial Accounting. My name is Dr. Annette Moultrie. Welcome to Managerial Accounting. This is Dr. Annette Moultrie, and in this video, we will discuss Chapter 1, which deals with the Introduction to Managerial Accounting. Chapter 1. As a disclaimer, this video and all other videos on my YouTube channel is intended for educational purposes only. I do not own the copyrights to the materials presented. All rights belong to their respective owners. So let's get started. Chapter 1, Part 1. So the learning objectives for Chapter 1 are: define managerial accounting and understand how it is used, classify costs used in managerial accounting, prepare financial statements for a manufacturer, including a balance sheet, income statement, and schedule of cost of goods manufactured. 4, describe business trends affecting managerial accounting. And objective number 5, describe how managerial accounting is used in service and merchandising companies. So with learning objective 1, we're going to define managerial accounting and understand how it is used. So what is managerial accounting? Well, managerial accounting focuses on providing information for internal decision makers. While managerial accounting aims to furnish information for internal decision makers in which they aid managers in making crucial decisions essential for success. Financial accounting, on the other hand, it aims to provide information for external decision makers. Now, managers utilize financial accounting to record financial transactions and also prepare financial statements. Financial accounting primarily serves external stakeholders, including investors, creditors, and government authorities. Now, these users base investment and lending decisions on the company's financial statements, which report past performance, and they must adhere to generally accepted accounting principles, or GAAP. Now, businesses typically prepare these statements quarterly, or some of them prepare them annually. So in contrast, managerial accounting, it caters to internal users such as managers and employees. The information it provides supports planning and control activities, focusing on future-oriented decisions. Unlike financial accounting, managerial accounting is not bound by GAAP requirements. Its reports offer detailed insights into specific aspects like product lines, departments, or geographical regions, aiding management in strategic decision-making for the organization. Managers' role in the organization. Managers occur in all different parts of a company's structure. Now, most companies structure their organization along departments or even maybe divisions. A company's organizational chart, it helps show the relationship between departments and divisions, and the manager who are responsible for each section. Here in Exhibit 1-2, it provides a partial organizational chart for Smart Touch Learning, which is a fictional company that's being used to illustrate the concepts in each of these chapters in the managerial accounting, okay? So you will see Smart Touch Learning company throughout these presentations, throughout these videos. Again, it's fictional. So here we have Smart Touch Learning. It began operations as a service company where they specialize in providing online courses. They provide online courses in accounting, economics, marketing, and management. Now, the company later, it evolved into a merchandising company, whereas they were selling tablet computers that are preloaded with its e-learning software programs. The demand for Smart Touch Learning's tablets has grown because customers like the online courses offered as part of their tablet computer purchase. So that's why they have a high demand. Now, Smart Touch Learning has done well, but the competition is requiring Smart Touch Learning to, once again, look at its strategy. So Smart Touch Learning has decided that in order to maintain its market share and to stay competitive, the company will begin manufacturing its own tablets rather than purchasing them. Now, Smart Touch Learning believes that the company can manufacture a tablet at a cost lower than the current purchase cost and still offer their customers the value they have come to expect. So here you see the board of directors. At the very top oversees the president or the chief executive officer, a CEO. So the CEO in turn oversees two VP positions. That's the chief financial officer and the chief operating officer. Now, the CFO oversees the treasurer and the controller. Okay? Who oversees the payroll processing manager. The COO on your right oversees the software development division manager and the tablet computer division manager, who oversees the production manager and the sales manager. And in the organization, you have the board of directors. And we know that the board of directors are elected by the stockholders, who oversees the development of the corporation's strategic goals. The CEO holds the ultimate responsibility for executing the company's short and long-term plans. Within a company, each position can be categorized as either a line or staff position. So what is a line position? What is a staff position? Line positions directly contribute to providing goods or services to customers, while staff positions provide support to the line positions. Here are some other terms that you should know. Planning, strategic planning, operational planning, directing, and controlling. So what is planning? Planning means choosing goals and deciding how to achieve them. Now, planning requires managers to look to the future and establish goals for the business. A business goals could be varied. For example, a common goal of all businesses is what? To increase operating income. Another goal might be to develop a new product or even begin operations in a new territory. Strategic planning involves developing long-term strategies to achieve a company's goals. Strategic plans often span 3 to 10 years. The other term we see here is operational planning. Now, operational planning, on the other hand, it focuses on short-term actions dealing with a company's day-to-day operations. Now, operational plans are most often 1 year in length, but may also span only a week, you can span a month, or even a quarter. The other term, directing. What is directing? Well, directing involves running the day-to-day operations of a business. We know that managers are responsible for coordinating the company's activities, including purchasing, manufacturing, and selling. I'll give you an example. A division manager must ensure that a company has enough materials on hand to meet the customer's demand. A division manager must ensure that a company has enough materials on hand to meet the demand of the customers. Now, managers are also responsible for motivating employees. A marketing manager's responsibilities might include coordinating the marketing plan and training sales representatives on the sale of a new product. The other term you see here is controlling. Controlling is the process of monitoring day-to-day operations and keeping the company on track. Controlling involves comparing actual results to expected results. An example is, well, managers can compare actual costs to expected costs to evaluate their performance. So if the actual costs fall below the budgeted costs, that is usually good news, right? However, if the actual cost exceeds the expected cost, managers will have to evaluate why the results were different and whether modifications or changes need to be made. Businesses rely on managers to make decisions. Decision-making is a part of all three functions, which we talked about in the previous slide: planning, directing, and controlling. And we know that good decision-making results in a prosperous company. Accounting plays an important role in a manager's decision-making. Here you see in Exhibit 1.3, the Pathways vision model. It provides a visual way to understand the role of managerial accounting in making good decisions. So managers review information about economic activities And then they use critical thinking and accounting judgment to create useful information. Now, this useful information should help managers make good decisions that in turn have an impact on society and also on future economic activity, whereas they are creating a circular flow of cause and effect. Ethical standards of managers. Managers, they often face ethical challenges. The Institute of Management Accountants, or IMA, they have developed standards that managerial accountants are expected to uphold when faced with ethical challenges. The IMA standards reminds us that society expects professional accountants to exhibit the highest level of ethical behavior. Now, these standards require managerial accountants to do what? Maintain, of course, their professional competence. They should preserve the confidentiality of the information they handle, and they should act with integrity and credibility. To address ethical dilemmas effectively, the IMA advises initially adhering to establish organizational policies. Now, if these policies do not lead to a satisfactory resolution, the IMA further recommends engaging in discussions about ethical situation with an immediate supervisor, whereas they want to seek guidance from an impartial advisor or consulting with legal counsel. Now, this multi-step approach, it ensures that ethical issues are thoroughly examined and resolved in a manner that upholds professional standards and organizational integrity. Here we have ethics. Where do you draw the line? Where do you draw the line? Let's read this. As the staff accountant of Casey's Computer Company, Sam Butler is aware of the company's weak financial condition. The company is close to signing a lucrative contract that should ensure its future. The controller, who is Sam's supervisor, states that the company must report a profit this year. He suggests 2 customers have placed orders that are scheduled to be shipped on January 3rd, when production of those orders is completed. Let's record the goods as finished and bill the customer on December 31st so we can show the profit from those orders in the current year. What should Sam do? What would you do? The solution. Sam could consider working with the production manager to get the orders completed and shipped in December. He could do that, right? The orders could then be recorded in December, and the profits would be reflected in the current year's financial statement. However, if that's not possible, Sam should convince the controller that the income manipulation is not ethical and it violates the revenue recognition principle, and that the company should not record these transactions in December. If Sam is unable to convince the controller, he has an obligation to report the situation to the controller's supervisor. It's a good example. Here you have in this Exhibit 1.5, IMA Statement of Ethical Professional Practice. These are excerpts from the IMA Statement of Ethical Professional Practice. Okay. Management accountants, they are dedicated, or should be dedicated, to uphold ethical standards. Okay. They should uphold ethical standards in their professional practices, guided by principles such as honesty, fairness, objectivity, and responsibility. Now, these principles are underscored by standards that emphasize competence, confidentiality, integrity, and credibility. So, by adhering to these ethical guidelines, management accountants ensure, or they should ensure, the highest standard of conduct and trustworthiness in their roles. So the first one we see here is competence. With competence, accountants should ensure continuous professional development by enhancing knowledge and skills to maintain effective leadership and expertise. 2, they should conduct professional responsibilities in strict adherence to applicable laws, regulations, and technical standards. 3, the accountants should deliver decision support information and recommendations that are precise, transparent, and timely, while also identifying and assisting in managing potential risk. Number 2 is confidentiality. With confidentiality, accountants should maintain confidentiality of information unless authorized or legally mandated to disclose. 2, they should educate all relevant parties on the proper handling and limitations of confidential information. They should monitor adherence to ensure compliance. And number 3, they should refrain from exploiting confidential information for unethical or unlawful gain. That's with confidentiality. Number 3 is integrity. Accountants should address and mitigate actual conflicts of interest, maintain regular communication with business associates to prevent perceived conflicts of interest, and disclose any potential conflicts to all parties involved. 2, they should avoid any actions that could compromise the ethical execution of duties. 3, they should refrain from participating in or endorsing activities that could undermine the reputation of the profession. And 4, they should promote a culture of ethics and integrity, prioritizing the profession's reputation over personal interests. That's with integrity. And the 4th one, credibility. Now, with credibility, accountants should, 1, communicate information in a fair and unbiased manner. 2, they should include all pertinent information that could reasonably affect how recipients perceive reports, analysis, or recommendations. 3, they should promptly disclose any delays or deficiencies in information, timeliness, processing, or internal controls according to organizational policies and legal requirements. And 4, they should acknowledge professional limitations or any constraints that may hinder sound judgment or the effective completion of tasks. Okay, so this is the end of part 1. This is the end of part 1. And again, as a disclaimer, this video and all other videos on my YouTube channel is intended for educational purposes only. I do not own the copyrights to the materials presented. All rights belong to their respective owners. So look out for part 2 as we continue part 2 of chapter 1, Introduction to Managerial Accounting. Thank you. Thank you for watching, and please do not forget to click the like and subscribe button. And if you have any questions or comments, please leave them below and I will reply to you.